Good morning, everybody. Monday morning, 9th of December, 9:12 EST, 12 minutes past 2 in the UK. I will just put the screen on for the Zoom members, so you guys should be able to see my main screen. Now, I am going to preface this with it being slightly messy. However, there is a reason why I have multiple sort of extensions on my screen. I'm going to break down why I have them as well. So, as always, I do have obviously multi-time frame analysis, the 30, the 4 hour. I don't know why, but for some reason this is supposed to be the daily, and this was the 4 hour that I have now modified. It really doesn't matter. It's just different time frames. But what is important, and I really do want to stress, is on the daily time frame. Where we have come to is pretty much, and it's a bit annoying the way it's happened, but this is pretty much this whole zone, this whole move up here is pretty much come to the point where I say I don't know what to do. Of course, I kind of know what to do, but this negative 100 of this whole ATR bar was like, this was my range expansion, right? From the 50 all the way up, and it was about 850 points. So it was a really, really, really nice trade, and that's why for the past 2 weeks, it's just been absolutely easy money grabs. This 50 has pretty much set up all of these extensions on the lower time frame. Now we are at that negative 100 from this whole range. It just gets a little bit more tricky. So expect it just to be lower expectations, a bit of a more potentially choppier price action. Of course, we never know exactly what we're going to get. However, we don't have to be a rocket science to realize we have surpassed all-time highs, and therefore it just becomes a lot harder to kind of trade. Of course, we are still long biased, and extensions of the whole year. If we just show you where we are. So I mean, geez, we have to go back. We have to go back quite some time, but we know where those extensions are. And of course, they started all the way back in 2023. We had the traditional that went to its negative 100. We then had the same anchor new high that traded the 38 and has completed those profit targets. That negative 100, I am going to mark just on here. And I will sync that. That is that 22,216, which is still the anchor of the negative 100, same anchor new high. And again, that traded the first extension March 23 last year. It traded the same anchor new high at the basically October 2023. It completed that negative 23 and negative 62 June this year. And we have then come down to test again the same anchor new high at the 38% retracement. Okay, here. And you can see how it wicked and closed above. So very, very strong. And then inside all of those extensions, what do we have? This is just on the higher time frame. But of course, we then trade out of that 62% retracement, which completes negative 23, ATR up. That negative 62 is still above us. Now, the same anchor new high of that draw is all the way down, back down to 20,000. So, down to 20 all the way down to 19.5 isn't off the cards. So I just want to show you the longer term perspective. At some point we will get a traditional back down there, but in terms of right now, we use the lower time frame extensions, which if I go to a half an hour time frame, you're going to see extensions that were in play. If I just zoom out, like here for example, we had the move up, we had the traditional that played out, we have the high to high within this sequence, okay, and you can see forget the exact high, 38.50 completes, right? So there are more. I'm not going to go through every single series because there's loads, but there's multiple series in here, and the reason I'm explaining that we're going through it is because this whole sort of mess here, as much as it is a mess, there are certain levels that I'm paying attention to, but I also want to just draw your attention to the trades we took last week and the textbook example of the high to high. So if we just go onto a 4 hour time frame, I'm going to try Let me try and do this on just the different contracts so it doesn't mess up all my drawings, because I want to do it bare. I've already pre-drawn them, but I just want to go through it just to kind of show you the precision and the accuracy, should I say, from these draws. And what's important to note, this halfway back here that sets up the whole move, and we obviously completed that negative 100. The reason we drew this halfway back, if I just go back to the NQ, you'll notice at that point this was a daily 50% rebalance. So what that means is this whole move here, if I just mark it out, why do I draw a halfway back long here, right? If I go to the daily, let me just put my indicators on. If I go to the daily, you can see here, this whole sort of zone, this up thrust candle here on the NQ, this up thrust candle here on the NQ, this becomes your low, which you can see, right? This is the low. And then that then sets off the pivot low. That pivot low is what sets off the halfway back. Again, if I go to a half an hour, you can see that pivot low sets off the anchor low. The high gets put in. It trades the halfway back here. It completes the negative 23, which is this blue line here. It then completes on the open of the 2nd of December, the negative 62 in purple, in blue. It then completes in the same session, the negative 100. At that point in time, it then trades the high to high. It then trades the high to high and wicks the 38% retracement just on the open. Again, it's amazing how these entries are always in the time frames we want to be trading, i.e. the open, right? So they have to get long at that time. Accumulate on the previous session as well as the overnight session, rebalance, retrades the 38, completes negative 23, which is here, negative 62 in blue, negative 100. Yeah, negative 100 here in double thickness. So this is this line here. Okay, 38% retracement, negative 23, negative 62, negative 100. Completes the negative 100. What does it do? Trades down into the next high to high. So trades into the next high to high, exhibit 1, exhibit 2, trades the 38, and then completes today's on the overnight session and also on Friday, the negative 23. And you can see here on the overnight session as well, trades 23. Now, so the reason I have multiple draws on is because I'm using several that I think could be in play. Now, that's why this screen here looks quite messy. And I don't expect your screens to also look like this. However, with me, I have more my own intuition and sort of experience that I'm willing to, experience on my screen. That's why there's lots of levels on here. But in terms of the basics, keep what works in terms of the basics. The reason I have a couple other levels on here is just in case other draws fail. Now, I have the high to high drawn, which is the most aggressive draw, right? Which is the most aggressive draw from where we closed on Friday. And that draw, which you'll notice, lines up with the high on Thursday the 5th, 12:30 to the current overnight high. Now, we've come down to the 62. In most cases, the 62 would be your stop out. However, I want to see when we open in 9 minutes time, do we open above the 50? We are so close to opening above that 50, which would then you could then argue for a possible long on that under-over strategy. Now, it's a very aggressive long. That's why I've marked it as one zone, right? We never are 100%, you're never 100% going to know if one zone is always going to work. However, it's a zone of interest. So that is basically 635s, right? A wait for a nice break and retest. If we just rally from that level, might be quite hard to find. I then have what is my next support zone, which is pretty much coming back down. Let me just mark this off now. which is coming back down to the high of the 2nd of December, 12 p.m., all the way to the high of 12:30 on the 5th of December. That is your 38% retracement. That is your 38% retracement. That lines up nicely with the rebalance that we had before, and it also lines up with the half an hour open on the 5th or the 6th of Friday, which is this ATR bar up. I like to see these get rebalanced at least midpoint or all the way down. That zone kind of lines up nicely with where we are. And apart from that, if we fail those levels, then I'm not really interested in terms of the long side until we do get a full sort of halfway back, which is going to be 21,000. Now, obviously, that's 500 points below. I'm just letting you know that I do have areas of zones in terms of on the lower end, but your more aggressive entries are going to be bidding the current high-to-high sequences. Now, for those who've got the masterclass, you know where they are, and you can see them on my screen right now. So I don't really want to give it's very rare I don't give a bias. It's probably one to maybe either not trade today or wait for at least a couple hours for it to trade, just purely because this could honestly, or as always, go either way. But you like to have a little bit more edge on your favor in terms of one way or the other. Right now, all-time highs, targets have been taken, money has been made. So now it's kind of like man at the bar analogy. When there's 50 men at the bar and only 2 women, it's very difficult to get, the woman on your side, right? So do I really want to be at the bar when there's lots of a competition? I.e., do I really want to be, trying a long or short a trade when there's probably hundreds of other thousands of people trying to do the same thing? It just gets very convoluted. So I am going to just step off the gas a little bit. We have lots of news Wednesday and Thursday this week, so it's probably going to be a lot easier to trade those days out of the week. And as I always say, this is a 2 to 3 day job, not a 5-day job, right? So pick and choose the days you want to trade, and coincide them with better probability days, such as having a clearer setup. You can see by my screen, this is not clear. Okay, it's clear in the sense of I know what I want to do when I want to do it, but I would much prefer to see this screen, which gives me my setup, my high to high, and my second high to high. And that lines up, again, same level on my screen. You're talking, basically a rebalance of this ATR bar, which is also the Friday's overnight high, the same anchor new high, 38%, and the ATR rebalance. So picture perfect, 21,500 is a real nice trade. However, the reason I have another trade marked is because the high to high is also playing out. So if that fails, then I will be looking for this rebalance down here. But as it stands, we have broken that 62% retracement, but we are going to most likely probably close open above the 50, which then validates the more aggressive high to high, which is from here, right? So if I know there's a lot of stuff here, but it's all really useful stuff. So let me just show you. So again, if you open above, this is where it's sketchy because you're in sequences. There's no sequence that has broken. Let me get my thing on here so you can see. There's no sequence that is broken, not broken, not broken, not broken. Each one of these sequences trades to 38 and never comes down to the 50, bar like the touch on the 29th of November. Now we have broke the 62 on the first sort of break that we've seen. And what's interesting is you have to remember this has actually completed PT. Okay, this has actually completed profit targets. 50, negative 23. Look at the completion of that target. 100-point overnight reaction. Now, again, the reason I'm explaining this is because this is potentially your support on your aggressive entry. Now, you have to ask yourself, how impatient are you? Are you willing to enter on an impatient trade? If you are, fine. That's absolutely fine. Know it, have it there in your mind, but at the same time, be thinking, do I want to put risk on in a higher or a less likely situation, or do I want to put risk on when I have a better risk to reward, i.e. a range of 270 points, as opposed to as opposed to just under 100. Again, it's the same trade, but you've got less risk. You have less range, which means you have less sort of risk to reward. I guess the risk to reward is somewhat the same because the range is going to account for the same risk to reward, but you're risking, in a sense, if you risk 30 points, but your reward is 100, and you risk 30 points, but your reward is 250 or whatever, you've got more odds in your favor in terms of range. So they're my levels, 21,600, give or take a point on the QQQ, so 40 points on the NQ, and then pretty much back down to 21,530. Again, just see how they react at those levels. Nothing is set in stone, especially on a Monday, especially when we are at daily all-time highs and, again, completions of really key levels. So 21,557 is going to be a real strong pivot. Keep an eye on that level.